Welcome to Subramani. I'm going to talk to you today about rich, reasonably, not just reasonably rich, very rich kind of people with a lot of money and a lot of options. So, many of them are young and they're rich because of the ESOPs that they exercised or the businesses that they started or sometimes by inheritance. So these people are rich, right? Seriously rich. I'm not talking of something like 5 crores. I'm talking of something like 50 crores to maybe 700, 800 crores. That kind of money. So most of them, many of them rather, are saying, especially if they are dealing with it themselves, they are like, I have a reasonably diversified portfolio, and so let's just stick to that. Let's put more and more. I can do more SIPs. I was doing 5 lakhs per month. I can do 10 lakhs per month SIP. I can do 25 lakhs per month SIP, and let us just stick to that. That is one. I don't have anybody coming and saying, I want to put in crypto and things like that and other complicated assets. But there are people who do it. And I found two types. One is those who have made their money themselves, which means they got ESOP, they play games, they play in cricket or whatever. They are happy with simple portfolios. I would call them simple, and I would not call them uncomplicated portfolios, because you have an uncomplicated portfolio to first complicate and then uncomplicate. So I'm saying it's a very simple portfolio. But those who are managing other people's money, let's say they are managing the family money and it's 500 crores. So the first thing is to say, should we create a family office? And should we look at fancy investments, right? So mostly, I mean, what could it be? What could fancy investments be? Could be anything. Could even be individual stocks which they don't understand. Could be some stock in a competitor, cryptocurrency, rental real estate. I mean, I don't know why there is a huge passion for real estate. So rental real estate or REITs, private equity, venture capital funding, private debt. All these things are very attractive, fatally attractive, I would think. Then of course, then there are hedge funds which they have to go, perhaps invest. They can invest through a fund manager, a PMS. They can create hedge funds and all kinds of complicated art funds, right? Things of all this. So my question to them is, what are the challenges of these fancier investment, right? So what is the problem in investing in some of this? So I think none of them is inherently bad. Some of it could have some higher risk, but then these are the people who are willing to take risk. They're even willing to take the risk of funding movies, right? So if these people don't take risk, who is going to take risk? And the reward could be a good, bad, ugly. I'm not getting into it. I mean, you could say 30% returns milega, but one movie in 5 going bad will bring down the return to 7 or 8%, which is what you should get in the gilt fund today, right? So what challenges are there in this? So first of all, it's not diversified. If a person has a 4 crore net worth, should he put 50 lakhs in a real estate PMS worth 50 lakhs? I don't know, because it's not diversified. It is too concentrated into one single asset, right? And they say you will get it in 7 years, you may get it in 14 years with a suboptimal return. So right, so you could, it is illiquid. It's you, and if it is liquid, it is liquid it's very expensive liquidity, right? So it's illiquid. You have to assume that the money that you put is illiquid. So can you really afford to lock it in for such a long period of time without any proportionate great return, right? So that is also not there. Another thing which I don't like is it's expensive to buy, expensive to hold, and expensive to exit. Everything is expensive in such assets, and you don't even know whether you are being conned. In a private equity fund, if you are invested, you do not know whether the fund manager is doing private deals. In a real estate fund, you do not know whether the builder and the fund manager have some private deals with themselves, whether that that whole staff is getting flats at a 20% discount. You have no clue, right? So there is chances that, unlike a equity fund where there is a back-end NSE or BSE record for you to check, right? So you know at at 13 hours 52 minutes which share was bought, you know exactly which share, what quantity, you get the exchange to confirm it. You have no such back-end verification possible in things like art fund and real estate and venture capital funding, private equity. You have nothing there, and these are expensive to own because there is no regulator saying you should charge only 1% fee, 2% fee, and you have no clue whether the person selling it to you is a broker or is a principal, right? So you do not know whether he is selling his own stock or he is selling somebody else's stock. So it's a completely opaque market. You do not know who are the other players, you do not know who is coming in, who is going out, right? It definitely lacks inherent value because it's a very small closed market. The buyer knows the seller, the buyer knows the broker knows the seller, right? Everybody is known. So coming to a fair value in such deals is very difficult. It is not a market arrived at value, market discovered value. It's not a market discovered value. It is just a value which people have come out with and said, okay, this is the price. Another important thing, neither you nor me, both of us don't have the ability to the skills to evaluate the investment. So there was one share offered to me. It's a company, I don't want to name the company, many of you may have heard about it. That share was offered to me at 106, okay, at 106. Only condition they put is you have to buy 1 lakh shares. So which means I have to put 1 crore in a share which was about to get listed, right? And I was balking because I knew the quality of assets which they had bought was nothing great, or what they were looking at, what they were proposing was nothing great, and I developed cold feet. But the problem is, if they dropped the price to 105 and said you could buy half, right, you could buy 50 lakhs worth of shares, I may have succumbed. Luck that they didn't. Then they said they stuck to that price. Then after some time, the same share was offered to me at 75. So I said, this looks good. So luckily for me, in any such investment, I know 2 people to call and ask, and they said, you've got to be joking, that guy is taking you for a ride. The same guy who offered at 106 was offering it at 75, but by this time the price had dropped to 30. And today the price of that share unlisted is about 6 rupees, and it's not worth buying at 6 rupees, right? So I know that I don't have the skills to evaluate the investment. So you check out whether you have the skills to evaluate the investment. Then ask yourself one question, and why are you making this fancy investment? So in case of this family office, there is some kid sitting there who wants to prove to the world that he's getting them deals which they can't get on their own. Because if he does not do all that, or if she does not do all that, what is the value add? What are you doing full time? Why? I mean, that's a question which they find it difficult to answer. So they have to show some alpha. So this is their way to show some alpha, saying I do these deals and it gets me alpha. But the thing is, there is no proof that this will get higher returns. There is no proof that a complicated portfolio which has art funds, real estate REITs, rental property, right, all this put together, there is nothing to prove. There's just not enough data of the past data also to prove that this will give better returns than a simple equity or a mutual fund portfolio, right? A well managed equity portfolio, well managed mutual fund portfolio, or maybe just simple couple of index funds. So when you don't have any justification for that, then the question is, why are you doing it? Do you think it will provide you some great passive income? What is the reason for you to be doing this? Is it fun? Is it exciting? Or is it something which you can stand in a party and say, I bought this venture capital shares and I did this, I put 50 lakhs, I put 1 crore. Do you want it to be a, let's say, cocktail conversation? check why you're doing that. If it is for anything other than getting great returns and you think you have the ability to assess the business, then it is different. And 99% of the people I meet don't. After they go through this rigor, they don't make those investments. But then those who want to make those investments, don't ask me. Thank you.